Tax time is always a stressful time, especially if you're running a small business. So let's make things a bit easier with our July 2025 tax guide. Hi, I'm your host, and we'll be taking you through all of the important changes starting with instant asset write-offs. Now this one everyone's been waiting for because it's been announced that from July 2023, the government will be bringing back the ability to instantly write off assets up to $20,000. So if you're planning to buy any equipment or assets for your business this financial year, then you may be able to write off the full cost of the asset against your taxable income. Now this will be subject to some rules and eligibility requirements. So do check with your accountant or refer to the Australian Taxation Office website for more information. And do note that this does not apply to luxury cars. Next, let's talk about the tax rates and thresholds. The Australian Taxation Office has provided us with the tax rates and thresholds for 2023-24. As you can see, there are some changes. So if you're an individual and you're earning less than $18,200, you'll be in the 0% tax bracket, which means you won't pay any tax. Once you start earning more than $18,200, but less than $45,000, you'll be taxed at 19 cents in every dollar that you earn. If you're earning more than $45,000 but less than $120,000, you'll pay 37 cents for every dollar above the $45,000 threshold. If you earn more than $120,000, you'll pay 30 cents for every dollar above the $120,000 threshold. And finally, if you earn more than $180,000, you'll pay 45 cents for every dollar over the $180,000 threshold. Moving on to business, and there are some important changes to the tax rates and thresholds here too. For businesses with an aggregated turnover of less than $20 million, the company tax rate will remain at 25%. However, for businesses with an aggregated turnover of $100 million or more, the rate will increase to 30%. This new tax rate will only apply to the amount of income that exceeds $100 million. So for example, if your business has an aggregated turnover of $110 million, then $10 million will be taxed at 30%, and the remaining $90 million will be taxed at 25%. Next, let's discuss the capital gains tax discount. If you've got some good news, and you've even made some profit from selling an asset such as shares, then you might be eligible for a 50% discount on your capital gains. To qualify, you must have held the asset for more than 12 months. But if you've held it for less than 12 months, you'll only get a 50% discount on the capital gain. And remember, this is in addition to your other income. And moving on to fringe benefits, there are some changes to the fringe benefits tax rates, and these are as follows. For cars, if you provide your employees with a car for private use, you'll be taxed at 20% of the car's value. If you provide a car that is available for both private and business use, you'll be taxed at 15% of the car's value. Now, if you provide any other type of fringe benefit, you'll be taxed at either 47 or 49 cents, depending on the type of benefit. You can find more information on the Australian Taxation Office website. Now, if you're an employer who pays your staff using the PAYG system, then you need to know about the PAYG payment. Dates for 2023-24. These are the dates that you need to pay your employees' taxes to the Australian Taxation Office, and they are as follows. For employees whose income is paid monthly, the final payment for the financial year is due on the 19th of April, 2024. For employees whose income is paid fortnightly, the final payment for the financial year is due on the 6th of April, 2024. And for employees whose income is paid annually, the final payment for the financial year is due on the 21st of March, 2024. Finally, let's talk about record keeping. The Australian Taxation Office has reminded us that we need to keep our tax records for at least 5 years. This includes receipts, invoices, bank statements, and any other documents that support our tax deductions. We also need to keep these records for 5 years after we lodge our tax return. The Australian Taxation Office can audit our tax returns for up to 5 years, so it's important that we keep our records for this length of time. That's it for this video. Remember to subscribe to our channel for more videos like this one. You can also follow us on social media.